am recording my screen, doing an audio check, and now I will be sharing my screen. Drop a 1 if you could see my screen, please. Awesome. All right, give me 1 moment. Very important, everybody understands the risk disclosures. I need to be able to put that onto the screen now. So please be mindful of the risk disclosures. Very important that you read this and understand it. Everything I'm about to say is not financial advice. It is simply just my own perspectives of the market. I'm not looking to tell you guys anything less than my perspective and my opinion. Appreciate everyone being responsible and understanding this. All right, let's get started. And I know it's Friday and some people are, let's say, a little bit sleepy or tired, but I would like for everyone to be more interactive as much as they can. First 2 streams have been incredible. For anybody that has not viewed the first 2 streams, I would definitely tell you that you're going to get the most value out of this stream if you watched the first 2. That's not obviously saying that if you're not here, you won't learn. I will try to do a little bit of a, excuse me. I'll try to do a little bit of a review and see where people are at in terms of how much, I guess, remember that we talked about, and we can go from there. But drop a 1 if you're with me. Looks like Tanber's with me. Drake, Eve, Kira, Bullish, Ripa, Jesse. Appreciate you guys. All right. So looks like everybody is more or less with us, and we're going to get started. So the first topic of the previous 2 first streams, does anybody remember what that was? Got a couple of answers. Talked about a lot of points, so definitely going to be multiple answers being said here. Original consolidations and PD arrays. Absolutely. Order flow, absolutely. This is MMXM round 3 castle. So 1 and 2 have been already posted to YouTube. Order flow, breaker block, yep. All right. Premium and discount, yep. All right. And again, this is the fun of what we can talk about and do, because no matter when I start the stream, which is crazy, because if you really think about it, no matter when I start the stream, you're going to be able to see a market maker model. It doesn't even matter. When I stream, when I look to do these things, you're still going to be able to see them. So when someone's going to pull up this stream for the first time, they're going to be like, why does the stream look so similar? And that's the beauty of what it is that we're looking at, right? So I want to just ask you guys again to be more interactive and say, can you mark up your charts and see what it is potentially that's going on at each of these levels, and say, hey, listen, where do I like to engage? Where's my personality standing? And when you can clearly identify then where you want to be, whether or not you want to be on the sell side or the buy side of the curve, is going to be really influential, because it'll help you decide where it is that you want to be able to take a trade or look to take a trade. Tanver has it right there. That's the PD array matrix. Very important. So if anybody's here again with us, just take a look at any of these fractals and we can literally talk about any of them, right? Clear one right here, 830, stops, original consolidation, redistribution, order pairing, sweep, swing low, offset accumulation, inverse fair value gap, stage 1 or 2, depending on how you viewed the curve, gets matched up with the buy side of the curve. From here to here is your unrealized dealing range. I'm going to be looking for imbalances below here, reaccumulation at a previous point of redistribution, consolidation breaks, change state of delivery, propulsion block, respects 50%, expansion, 2, buy side. Here, swing high, offset accumulation. Does it break any internal? No. Into projections from previous manipulation, extensions to liquidity pools, just shy of 30 points. No body closes above there. We break order flow once, manipulate twice, and return back to previous point of equilibrium. If any of that was not clear, drop a 1 in the chat right now. Please ask a question of what was not clear if you dropped a 1. This is basically a high-level overview of what we talked about in the previous streams and taking care of basically a market maker model. Does anybody think that this is quote-unquote changing if this keeps happening? Because this is now the 3rd stream where we break down and we talk about the stages, the overlapping consolidation, order pairing, where we're matching up buy side with sell side, order flow holding, offset accumulation below an important wick low at a key time of day inside of a macro that then breaks order flow again, order pairs from previous redistribution into new reaccumulation, has another reaccumulation with the stacked order flows, understanding this is an original consolidation, locating the equilibrium for any order blocks. Equilibrium. 2. Expansion targets. You're calling for the return to the EQ because the EQ is associated with 2 overlapping fractal consolidations. So, yep, when you have the overlapping of the consolidations, this is larger consolidation. So again, you could either extend this out and you can see that this is pretty much that equilibrium, right? So here or here, it's very minuscule, but the point matters which of you're saying that there's an overlapping, and you're correct. And again, locating how the previous sell side of the curve is then matched up with the buy side of the curve, and then easily utilizing the fractal consolidations, Pro Plus, to identify these consolidations, and then noticing, well, EQ of a larger consolidation was broken. That means we're on a further buy side of the curve. That is then held with order flow. Down close candles are supporting price. Price continues higher into extended premium extensions. So if anybody, again, watched the previous stream, they would be able to see, again, quite the understanding that, again, we're locating the macro timing, order pairing, redistribution, smart money reversal, and low risk buy, reaccumulation, taking out the original consolidation high for offset accumulation on a mechanical basis occurs at this candle here. Offset distribution, I'm sorry. And then again, no break in significant structure, even though we have a break of small time order flow, has another consolidation to then run up into an extension target. Price then retraces into simply another leg here where we discussed, again, the swing low that occurs into the discount leg. You want to see it have a change of state delivery at or around there. And this is again where price is then speeding up. And I know people are going to be like, Josh, yes, you're crazy. But we're on a 15-second. But just so you can see the structure, again, everything we talked about, there's swing low, breaks above it, and this is basically your breaker at equilibrium that we talked about. So price pretty much, again, you can see, this is why I say that time frame doesn't really matter, because the moment you start to understand these things and you start to see the consolidation, breakdown, redistribution, smart money reversal from offset accumulation from this low down, low risk buy, reaccumulation, high. So it's very mechanical, the way that you look at the market maker models and to see them. So we pretty much just did a review of this, and then we saw how this curve sped up, and that's why it's not getting detected from any fractal consolidation. It's not fractally consolidating, right? It's speeding up. So it's speeding up, I go into a smaller time frame, and then that's again where we talk about these are the kind of signatures that you say that, again, if you're not pressing the button here or locating a stop sweep in stage 1 or the original consolidation, then these legs are going to be harder to catch on the existing time frame that you're locating them. Anybody have any questions based off of what we just talked about? Because I just took basically the journey of part 1 and part 2 and summarized into part 3 and locating a pretty much a time-based fractal point of delivery, and we just looked at it. So hopefully that was clear. Clean all the time. You just have to, again, know where you want to be. We'll go over another example shortly. M15 H1 time frame. So the only reason why I have the seconds up, and again, this has been explained, but it's again just more part of my personality and how I look at the markets, that I enjoy looking at this specific time frame, because the deliveries of the fractals that I look at are generally going to be 1 hour. So it's like if I'm operating in 1 hour time frame, and you can basically see that I'm using a 3-minute fractal consolidation inside of a 15-second chart. So each stage, I talked to you guys about this. Per your time frames and how you scale up, you can easily just use time frame alignment as pretty much seen from like Sniper and T-Trades, and most people have, again, that similar standpoint of how they view time frame alignment. So this is just how I personally view this time frame, but you can use the same principles utilizing any of the time frame alignments that have been discussed. So if you go to, whoops, that's another tool. So if you see here, for the time frame alignment, this can help answer your question, right? Does anyone have any questions before we continue? Because this has all been basically just talked about from the previous stream. Testing 1, 2. Are there any questions? Got some people typing. Want to make sure everybody's having a chance to be on the same page because I don't want to have information overload or again, we don't understand each other and then some people are confused. So I want to be able to avoid that. As a quick review while some people are typing, see this is an original consolidation, holds highest up close candle, rejection block, bear shorter block, propulsion block. Does it produce a fair value gap? Yes. Liquidity void? Yes. Mitigation block to the lower high? Yes. Order flow? Yes. So that's a PD array matrix, just how my mind again sees it. And for everyone again that was watching part 1, part 2, you can start to see that it's pretty much the same thing, just mechanically. The settings for this, again, happy to share this chart, copy the link. I want you guys to have your own markups. So you can, if you're an elite election subscriber, you can basically take that layout and then be able to copy it. And then you'll have all my settings and my chart colors and everything. If you don't see my stream, I believe it's you, but please someone else confirm as well. Testing 1, 2. Can anybody see my screen? You can go to the Toodegrees YouTube and find them there. Does anybody have any questions based off of this specific framework here before we continue? All right. So if I talk to you guys about MMXM, now everybody should be able to understand this. So I talked about the time frame alignment stuff. Again, if you have the forever model or even the fractal model, you could see the time frame alignments here and operate within that. That's your baseline for time frame alignment, and then if you decide to do something different or not, then that's what your own backtesting can do. So that's just like the best foundation to start with. I just, again, for what's on the screen, is a 15-second, second chart, 3-minute consolidations, 15-minute OHLC monitoring with 1 hour premise. That's basically what's on the chart. So 15-second chart, 3-minute fractal consolidation. The delivery that I want to be inside of is a 15-minute chart, and then I'm looking at a 1 hour delivery premise. So hopefully that makes sense. Let us know if there's any. Why can't I open settings to Choppy? It's because you're not an elite subscriber, so you don't have the indicators that are going to be locked. So hopefully that answers your question. All right, let's get to the fun stuff. 65 people in here. How many people watched the first 2 streams? Drop a 1 if you watched both streams or were inside of them. Well, everybody that just dropped the 1 right now, they're going to get the most out of this because they'll understand and they'll remember what it is that we talked about. So again, because it's this important and I want to talk about it, what is one of the first signatures I look for in an original consolidation to start the leg? So if anybody watched it, overlapping consolidations is true, but what is a specific signature that I've painted on the chart now? Here, stop run, exactly. So I want to see a stop run that occurs at or around the equilibrium of the price leg. And I said that that is going to impact the size and the speed in which you see the curve develop. So that means that basically the point of which that you have the stop run here. So the moment you have a stop run here, this fractalized curve is going to be more important. So again, for everybody understanding that premise, we're going to go into more about the order pairing and a little bit more of just discoveries and things that we talk about, understand how we can match up basically the left side of the curve, the right side of the curve. And then because the last 2 recordings were talked about in the market maker buy model, I'm also going to do an example of the market maker sell model just to be inclusive. So basically what we're going to talk about is that the moment that you have that fractalized curve that happens here to here, and I want to get the poly line because this is pretty much what I need. So I apologize if that was loud. I don't really know how to use this thing. Kind of struggle with it. I like double click. And again, if you haven't done this by now and you have been into the streams and you're not really getting the best out of it, because all this is just like price engineering, right? So if you can do this, the sooner you can understand what it is you're looking for before it even happens. How many people have done this at this point? Hello, testing 1, 2. How many people have drawn something like this? Good. We're gonna get a little bit more specific today. I think that's good enough for the OCD right now. So if you want help drawing this, all you gotta do is understand this. Price is gonna move up and down and up and down, and sometimes it's gonna have a stop rate, and then it's gonna have a lower high, and then you're gonna either just make price movement, right? So I don't know if that's helpful, but the sooner you can just draw something like this, you can start to understand what you want to be able to look for, right? And I know it sounds like crazy, but it's like you got to be able to paint it before you can do it. All right, here we go. So I'm honestly really excited right now. So this is where we were last. We went over this. So this is where we were. So we went from this, the stop runs, exactly, the legs that have the stop runs. And then we refined it to the imbalances that were inside of that. Exactly. Rap, shout out to you, bro, honestly. I really appreciate you being interactive. It means a lot, honestly. And then the equilibrium, which my line is a little bit off. Then the curve shift. All right. So at this point, this area here, which is basically this previous redistribution into new reaccumulation, right? Last time we talked about this. And then now we're going to talk about this. So point being here is that our sell side of the curve here and the buy side of the curve. And if this is quote unquote boring because we've already discussed it, it was definitely more exciting the first time you've seen it, right? So it's like now you see it like this, again, you'll see that it's just the same thing over and over, right? So what we're going to be talking about is specifically the order pairing and getting deeper into it. So when we see the stop run leg happen and we see the fair value gaps that are inside of this stop raid, we then mention that I want to take those and drag them out. And they're going to be dependent on, let's say there's a couple of legs here or there, right? So if there's a couple of fair value gaps, these are the questions that you can also be monitoring, right? So from like high to low, now this is your equilibrium. These also can be qualified by creating smaller equilibriums. So this gets a little bit messy. So I just want you guys to be able to understand, like if I see this high to this low, this pretty much is the equilibrium to that. But from this high to this low, there's equilibrium here, right? So there's going to be basically a smaller equilibrium price point between the stop rate here and the leg from last redistribution to the smart money reversal. So basically what we're going to be looking at now is that depending on the delivery that's based off of here of how aggressive it is, that's when I start qualifying or monitoring specific fair value gaps that are within this larger leg, right? So when you say, oh, again, which one do you use? The easiest way for you to also see it is basically just watching where specific order blocks and or fair value gaps are placed on the new buy side of the curve. So basically what I mean by that is that regardless if there's going to be, let's get the arrow thing, regardless if there's going to be a stop rate or here, one of the easiest qualifiers that you can have is just recognizing when there's going to be basically new order blocks or new fair value gaps on the leg that's going higher here. So when a previous imbalance is then traded back into and shown as either support or a new imbalance is created within the same range, you're basically monitoring that the previous displacement is now getting recapitalized on. So they're going to basically create a smaller balanced price range. So again, what that looks like is you'll have a leg here or here, and let's say price is trading efficiently in here, right? Which one am I going to be qualifying? I'm waiting for the signatures to either show new order pairing from, again, make these red, from previous order flow to then be seeing new order blocks and new order flow holding, right? And you're like, well, you might be asking yourself right here, does this position matter? And if you're not asking yourself that, then this is a good question that you want to ask yourself, because the models that are going to be more aggressive, and again, if you're not writing this down, this is part of the point that you want to be talking about to yourself, and also back testing and putting chart examples and verifying to yourself, right? Not just taking my word for it. When previous stop legs happen with redistributions here, I personally want to see these ranges be higher than the new capitalized ones here, because that means that I will personally see they sold higher than they're buying more lower than they previously just sold. If you have an aggressive model, what I just said means that these will go higher than these. See what I'm trying to say? So where the new capitalizations are relative to the curve are very important, because that's where it's going to show you the direction of speed. And then depending on where basically these are, all you're seeing is basically this is where they're matching up. You understand? So these orders are just basically, again, on the sell side of the curve, they're getting recapitalized to then either flip long or buy more, because it's selling some more. So buying some more. Drop a 1 if that makes sense. So what we're doing now is locating where specific redistributions are on the left side of the curve or in the sell side of the curve, and monitoring if new recapitalizations start to occur or above this, because that's going to tell you this next portion. Does that make sense? Can't believe there's 56 people in here, honestly. I don't want to go too far too quick, because I want everyone to be on the same page. So we're literally building the journey, because before this, half the people that are basically saying, yes, they understood it, didn't even recognize what happens here or here. And now we're basically building off of what each stage wants to do. And now we're basically taking the signatures in price so we can see from these previous stages and going on to the next direction here. You guys ultimately have to recognize this stuff's not going to change. So it's like, this is the craziest. This is pretty much the craziest thing that you can see in price. And that's why I'm just surprised there's not a lot of people here on a Friday, because it's pretty interesting to me. If I were to readjust this drawing, which this is kind of why I like doing my own trend, because now I can't really delete this. But basically, let's go back over here. And this is going to look a little bit different and just show you guys I'm not perfect. I'm just trying to get the point across here. Oh my goodness. Fat fingered. It's nice delivery again right there, though. We'll go over that. Oh my goodness. The bloopers on this are going to be funny. I'm sorry, guys. I just fat fingered twice. Let's try that again. So, point being, again, is the graphic may have changed a little bit. But what we're going to be monitoring now is, again, you see how previous redistribution was above here? And now you can say, again, previous redistribution would be here or here, right? And now you can see that the stop run is here, and the next stop run doesn't happen. So the next one would be here, right? So you can see, oh, this was now, instead of this is like this, and then this one is like that. So what I'm ultimately showing you is that when you take your own examples and you recognize where they are in previous backtesting, you're going to come to your own conclusions, and recognizing that when you have horizontal, call this basically horizontal pairing, like equal pairing, lesser pairing, or greater pairing. I'll write that down. Let's just be, again, interactive here. Why do you think this matters? This is literally, so why are we talking about this in the first place? Why are we talking about this? Can anybody answer this question? Why are we talking about, why does this even matter? Well, so Castle's saying right now, because it helps determine the following direction order flow. Exactly. Confirmation order flow. So again, why is this important? Because it's basically showing you when you're going to see certain signatures of speed and price, and where your matching of orders can be resting in the aggression of the next move of the curve. That's what answers this question. Why are we talking about this? When I can see the order pairing that occurs here at the equilibrium, or here near 25% of the price, or even maybe below, then that means that I can just be more in tune of saying there might be more reaccumulations on the buy side of the curve. So this not only shows you speed of price, it also shows you how many stages of reaccumulation you could potentially have. Absolutely. Exactly. So when you see, this is going to start to show you different signatures and how you view different curves. Because most of the time, again, just as a generic basis, we've kind of talked about this, but like curves are not going to be always, let's say, uniform. Sell side, or basically original consolidation from here to, let's say, even here, because I drew that a little bit wrong, but it's like, this is a longer curve, right? So the speed of which you see your symmetry for both sides are going to depend on what you're doing on your stop leg raids, and how pairings are equal, lesser, or greater. So Drop a 1 if this makes a little bit more sense. So we talked about qualifying these, which means that I'm watching new recapitalization. And all that means is, again, previous fair value gaps. I want to see new fair value gaps get created in similar and or nearby ranges, and or the order blocks that were used to mitigate orders here. I want to see them to get recapitalized and get new order blocks in either a equal, lesser, or greater pairing. And based off of where that is, if you guys can understand what this is, you take on the least amount of risk, not financial advice, you take on the least amount of risk from here, from equal or lesser. So it's like, if this is lower, then I already know I'm closer to this invalidation. If it's greater, then I know that I'm going to be further away from this. But the greater pairing still may indicate more strength, that it's going to basically take out this buy side with ease. And then it's going to not set offset distribution above these highs to then retrace. So that's why we're talking about this. But before we could talk about this, if I introduce this on the first journey, you guys be like, well, what am I doing? So it's like, hopefully the previous two can be a supplementary understanding to recognizing, well, am I going to have equal, lesser, or greater pairings, and how that affects the rest of the buy side or sell side of the curve. So that's something to study. Second thing we're going to go over right now is market maker sell models. So we did a lot of buy models. I want to go over the sell models. When you're in bullish markets, the easiest thing you can understand right now, it's very important, is all I can do is go over here and put on, let's just go over here, we're going to go discount EQ. The easiest thing you can understand is on a market maker sell model is that a lot of people think that it's just always has to go from here and then just, I'm saying, so it's like, we talk about this all the time, but it's like, where do certain things fail is very important to talk about, because not a lot of people talk about it, right? So when do market maker sell models fail? Drop it in the chat. See if you can come up with some understandings of why you think that market maker sell models will fail to take out the original consolidation low and or another low that's nearby. Trending markets, great answer. Also, if it's just a retracement. But that makes sense, but it's like, specifically where in the retracement do you expect a market maker sell model to fail to displace as well? Higher time frame market maker buy model. Those are all good answers. So it's like, when there's greater or higher pairing of redistribution above relevant reaccumulation levels. We're going to get into that. That's a good understanding to know that the gears are turning. Wow, Dell. Appreciate you. All right. So one of the easiest, most simple mechanical things that you can just do is that on a market maker sell model, when you're targeting on the sell side of the curve, the moment that this occurs right here is when you literally just like extreme pay attention, because all this does is shows you, bring that over, where the leg goes from a premium to a discount and relative to a previous original consolidation and or high resistance. One of the easiest things we can do, again, mark out original consolidation, ballparking the equilibrium here, be the first target. So then just watch order flow after that. If I watch order flow from here, the only nearby order flow I have is pretty much the order block or this order block. Well, this order block, propulsion, fair value gap, well, this already would tell me that on the discount leg of the curve, until we basically break this candle's low, I can't really be bearish. And then coincidentally, you see that, and then price will come down lower, and where does it go? Additional consolidation, equilibrium. What do? Monitor our order flow. This is a telltale sign, and then now we basically have order pairing. Price is going to go out and start to raid either back into the EQ, into this, and or here, and wait for the 830 engineering. So that means that this and this high is pretty much now there. So they go over here, raid the highs. Now they also want to look to raid the lows. And that means that this original consolidation starts there. This is where we were in price. And now you can see, look, this is an example again, how we saw previous redistribution. The highest stop rate, you can see there's basically, these are all equal. So there's not necessarily a stop rate in here, right? Well, what do you have here? There's a low. There's also another equal low. So you can see how this right here, all these equal, all this equal. So it's literally equal engineering. Does that show you guys? You can see how the redistribution and reaccumulations from here, look, like these new order blocks, they're absolutely equal. So this is a nice symmetrical consolidation, right? So look, When you're here, it's where we mentioned this is your only reaccumulation in this price leg here. Means that the order pairing that was now done here. You see how this is now more aggressive. Same thing on the PD array matrix over and over again. Stop rate, larger sell model on the sell side of the curve that goes lower than the original point. See what I mean? Look right here. So here, this leg, here, your reaccumulation. You have this range right here relative to this. So this is what I'm monitoring continuously. Here, you don't see any stop rates. Mechanically speaking, there isn't any until it takes out here. Well, order block originating at the original consolidation equilibrium. It's just the same thing over and over, and then just following order flow. A good example when you can see the signature's difference. See the difference? Take a look at that. Where is this occurring, and where do these get formed? Previous imbalances at the EQ of the leg. Let me go over here and get my quarters out. So you can see that anything above, even here, newly created imbalances, this shows you they're pairing. Talked about this on last stream, and yet it still happens again. The low that took it out, why didn't this time at 10:28, why didn't it run and take out this low? Engineering, shake and bake, Ricky Bobby. Previous area of redistribution, capitalizations. Bet we see an SMT here. Come on, I got lost right here. Well, would you look at that? Let's see if, so they didn't give the SMT on the actual low, but as we talk about on the last stream, these are the signatures. You can use this low here and they all ran it. But look at the bodies too. Relation. Sending into same thing. High to low. Where does it stop? Consolidation, break, equilibrium. Order block. Is there any additional displays? Fair value gap here. Order block here. I want to see a liquidity void. And that means that this needs to hold. These are the internals that are inside of my head. So that if we don't hold this, then I know that I'm not on a higher time frame sell model. So these are just, again, I wouldn't mark out my charts like this, but this is how you guys see what I'm looking at internally. And again, if I start identifying the PD array matrix and it's incorrect, then that means I know that, again, you see what I'm trying to say? I'm just constantly measuring my ranges, consolidation, order block. This never really failed. There's your SMT. This is going to be here. So this mitigation block is just being now on the buy side of the curve. So it's your first sign of order flow. So going below here would basically invalidate the smaller, lower time frame buy model. That would basically be setting up here. So you're constantly just going again from to discount to premium and then measuring out the ranges, locating order blocks, previous order pairings, and then seeing how price is just going to basically deliver. So you see how that you have order blocks stacking now. We're going to talk about this in previous streams. So it's like, see how stacked order blocks here. So like, got opportunities here. At a certain point, they're going to have to tip their hand to show you that, well, they're not necessarily interested in selling anymore. And that's how I monitor order flow. I just am using this as a teaching tool for the plentiful of examples that the lower time frames bring you. So NKLQT asks specifically why I'm looking at the 15-second chart. That's again because price will be able to move, show you different signatures and where I would be able to want to look at them, right? So I'm constantly interacting and seeing how does the curve interact with the new development of either the buy side or the sell side continuation. So this is where traditionally, again, you'll see a lot of people just put their trend line here. And then basically what gets flooded, all the liquidity that's here and here, these are equal highs. This is when things can get a little bit interesting. But again, I'm just basing myself off of what happens on the sell side of the curve and watching how it engages with new order flow, right? So let's delete these and you'll see that now, look, we have a new fractal consolidation. So I click on this box, I remove all these drawings. We have another one developing. You can see here clearly, objectively speaking, this is the first sign of an order flow break. And a lot of people are gonna ask and notice that this is gonna change colors. Again, this is waiting for the close for this candle's high to then annotate whether or not it's a bullish or bearish order flow close. And that's what these boxes are. Either they're blue or red. Bullish breaks, bearish breaks. And you can see that that's here. from order flow break. So this is where, again, a lot of the trend line traders get trapped, because they'll just simply look at this and they're going to be like, oh, I want to be able to just see it fly. But then these little things, if people are just impatient, that's when they start to be monitored. So does everybody see how I basically just took the sell side of the curve, dragged it over, monitored a new fair value gap, and watched the delivery utilizing a propulsion order block from here that located from the equilibrium? Because I basically annotated that. You can go back in the recordings up until we go below this. I can't invalidate the higher time frame bullish setup. So I have to wait and see, are they going to close here? Are they going to interact with order flow here? Objectively speaking, as we were walking through price, this was the first sign that they broke order flow. Well, they broke order flow basically here to here. These are propulsion blocks now. So like my mind on an order flow basis, and I know that we're on a lower time frame, so price can just wick it out instantly, but it's objectively speaking now, this is what I see. So you can see how this up close candle and this down close candle basically matching. So that's your order pairing that you can see basically live. It was on the first stream. So I want to qualify in this setup, 30 points above here. Do I see a nearby liquidity pool? Well, that's what this is. So what do we say that we want to monitor on higher highs? You got to be quick with this stuff. And this is why, again, shout out to JD, target the bodies of the liquidity pool. Stop rates here, body from the stop rate, extend that out. This is basically where, if they are going to retrace, it's going to have to be here. If they don't retrace, your mind just watching for the offset accumulation protocol the moment that we break consolidations. And you guys can see, objectively speaking, look, down close candles. So the moment that they're stacking more than 3 in a specific location, all that does is just builds up low resistance order flow, if that makes sense. So when you guys see, if someone asks you a question about trend lines and all that stuff, trend lines are just builds up of order flow. See what I'm trying to say? At a certain point, when the trend line basically builds up, all these pools are just stacked liquidity. And this is when basically the market, I'm not going to say likes to do this, but it doesn't like to have a lot of people stack orders continuously without creating a stop run unless you're in a very strong buy program. So just something to annotate. So again, for everybody that basically says that we don't call things out and see things live, this is basically a perfect depiction of what you see as a larger buy model that basically fails at equilibrium, fails to take out an SMT low, responds to the rejection block that produced the smart money reversal, change state delivery with a propulsion block. This propulsion block needs to get close through below in order to basically validate the larger sell model. We didn't validate that. We simply just had a new response into where we were mitigating orders that was here. And then price basically responded by creating new order blocks here, new imbalances here, and then price just objectively speaking broke order flow from the bearish to looking at bullish signatures. So that's walking the walk. Anybody have any questions based off of what they just saw? It's not just theory. I can promise you that. Funny how that is, right? Let me get a sip of water. Drop some questions in the chat. So this might be the most wonderful textbook example that you could possibly see. And there you go. There's your offset. So we're doing well. Sign of time. We're doing well. Just basically walk the dog. Same old time. It still happens, right? It's kind of funny. So is anybody objectively confused on what they just saw happen right here? Is anybody confused on also seeing how there's no stop runs here and price just aggressively went there? Well, look how much longer the buy side of the curve took. Yep, so I'm just monitoring down close candles. So when you're just talking to me about there's a question in the chat about that, you can see here I'm just again monitoring up close candles. And again, you see how this, look at the time, we talked about this, right? If I choose candle here, look at the 5-minute close. Does it respect it by time? Yes. So again, I'm just monitoring order flow here, and this should be blue. This is my propulsion block. There's my fair value gap consecutively. So I know that we're building a liquidity void. We went over the mitigation block. Price started expanding to a nearby dealing range equilibrium and order paired below and then has basically pending liquidity that was here and here. And then again, this is your first pierce of the high. This is your second pierce of the high, and this is the event of offset distribution produced an imbalance that is here. And that's basically all I'm just monitoring now that's in my head. Can you ask a question, NKL, QT, specifically about what you're confused about? And wrap, hopefully that answered your question. I'm not sure if it did. Just for anybody that's also paying attention, when did this occur? This is now bullishly responding, and you should really just see basically expansion. Failure to expand below here is again where people that, let's dive into it real quick. Again, forget that this says whatever time frame it is. You guys don't have to pay attention to that, right? When price goes and raises an original consolidation high here, and then it raises another one here, this is when, again, people that don't, like, let's say you're trading on an unrealized trailing drawdown account and you're in a market maker buy model. Again, this is, I have to be very careful when I say this is not financial advice, not a trade recommendation. This is just purely my own opinion and how I view the market. This point right here, this candle's close, is extremely important for how the next leg of order flow materializes. So when this candle fails to displace here, all this is just tripping in people that basically trailed their stop before basically the next leg. And you can see again, it's basically your lower time frame C2, and then this is T trades. Again, regardless, this could be a daily chart. That's exactly what he shows. So, and then again, see, and now this was the offset accumulation. This is something that I monitor. Again, if you're looking at continued order flow after offset accumulation, how do candle bodies basically respect old highs and old lows? Because that's basically just going to determine a quote unquote true trend. When I say that, excuse me, that it respects it with time, so let's say that we were over here. See how price basically tags into this order block and then it has a response away from it. If I'm trading on a lower time frame here and I have a higher time frame pairing, basically what I would do is, again, if I'm looking at a 3 minute, I'm basically monitoring the order flow as well on a higher time frame and how that candle closes. So when you go over here and you're within that 3 minute candle, basically, this again is still holding based off of time on the higher time frame order flow. So when we talk about it like that, that's really important. I look at the 3 minute and 5 minute candles based off of the time frame closes that I see on these candles, right? So this candle is originating part of the 5 minute candle. So if this is the 5 minute candle origination, that means the next 5 minute candle ends here. This is still lower than the point that we opened here. So we're still bearish. Does that make sense a little bit, hopefully? And this shouldn't freak out anybody in terms of anything, because again, all you're doing is going back into a discount. So price just goes from discount to premium. Interesting, right? From premium into a larger discount. So now, again, as you guys can see, it went to rate out liquidity here, back into the discounted leg, back into a previous order pairing area, and then just overcame this. And now again, the stops should be pretty much neutralized here. If they're not neutralized here, this is the last line in the sand. So basically, as this goes up, right, this is now where you're basically looking at in terms of, oh, on an objective basis, this fractal that just happened here is the same exact fractal that you just saw. Does anybody have any questions? Because we're just demonstrating off of live price action. This is not a trade recommendation. This is simply just objectively reading price based off of the terminologies and methodologies that have been shared in the previous journeys that we've had together. Because all of this is, again, the same exact methodologies that we demonstrated in the videos. So it's not anything that's new. All we are just looking at the price legs. So you can see here again, this area in price is a displacement, so it's not going to obviously be fractally consolidated, right? So the rate on liquidity is again what you're watching in discount. Don't really have that much for you guys. I have a quick question, and I don't know if he's in here, but it's Algo. Are you here? There's a little something that I personally like to monitor, and it's called the 11 o'clock cleanup. So 11 o'clock, open, trades lower, forms the wick of the hourly power of 3, trades up, equilibrium, the hour power of 3. This means that we have a bullish framework for the market for this hourly candle, and it gets invalidated here below the opening price, again on a temporary basis, because again on OHL stuff that we talked about, open, low, high, retracement, and then close to be somewhere around here, right around the whatever. I'm not trying to anticipate the close or anything, but you guys kind of understand the analogy. And the coolest thing, which again you can do, I knew you were in there, bro. Oh, Algo, you a funny guy. All right, well, again, this has been pretty much a very insightful journey. Hopefully that you guys can basically see it is the same way as that. We basically called out, again, the live order flow tape reading of the 11 o'clock. If you guys can look to the left, you'll see that from 11 o'clock, we are inside of a larger consolidation. So it means at 11 o'clock, I really just want to play the power of 3, and that's it. So you guys asked me about the 11 o'clock cleanup. I will send you this video, and you'll be able to watch it and maybe ask me some other questions maybe that I didn't cover. But drop a 1 if this has been clear or insightful, because I don't know what more I can also ask for from the delivery of price, because it's been absolutely beautiful, and I'm literally walking it like a dog up and down. So, well, there you go, folks. And this is where everyone starts laughing at me, but it's like right here. This is where I struggle as a trader. Truthfully, this is where I struggle, because I'm just like, you know what? We're so damn freaking close to this liquidity pool. Obviously, I see there's a small stop right here, but it's part of an original larger consolidation. As clear as I can say is, I get impatient here. That's the only thing I can say, is I get impatient in here. And this is where, again, you guys may be more suited to helping me even and understand more things about this. But it's like all the delivery of the curve was perfect pairing here, offset accumulation, the discount after so, and then basically going here. And it's like, this is like full quote unquote A plus setup. And even when it's not a quote unquote A plus setup, then it's like, why am I still getting impatient here if I know that everything is telling me that I basically want to take out this? And this is just my personality. Those 10 points I don't necessarily care about, but it's just like, as brutal honesty as being a human, I can't sit here and tell you that I'm not impatient to say that this liquidity doesn't qualify the way that I see high resistance, and it's basically part of a larger market maker buy model. Again, this is just brutal honesty. So hopefully you guys can appreciate that. Can you rephrase your question? Is this specific to futures? So if you're talking about market maker buy models, this happens on every single asset class. Stocks, commodities, literally everything. So you can see, again, as a trader, again, you have to make your own decisions, because the liquidity can be literally right here. And when you're getting impatient, if you don't necessarily adjust your risk accordingly, then it's like, this is just where, again, people may just catch more of the move than me. But like, when you guys can recognize on a human level where I tell you these things, and then you see these reactions are meant to play off of these emotions. And I don't know how you guys can further understand that, but this is when, again, all the people that I'm talking about, analysts and generalization, but it's like anyone that potentially had a long bias here and didn't take profits or here, then guess what? They're now saying on a situation, saying, oh, this is my nearest stop, this is my nearest order flow. Basically going below here would invalidate objectively the run off of order flow. And it's like, it could easily go down to take back up on stops, but it's like, this is the information that you got to be able to consistently monitor if you want to manage your position. Otherwise, someone would just set and forget. And then if you're a set and forget person, again, the original invalidation was right here based off of order flow from the propulsion block EQ, objectively speaking. And for anybody that, again, was in the original live streams, and I said to people, hey, listen, this is the entry that everybody, their mothers, wants to take, or the moment that you basically press the button, you'd be like, oh my goodness, it's not going to basically return to that price. Well, this is that vertical reaccumulation stage of it, a little bit more sloppy. So it's like, when you guys see it and also have me walk it live with you, like I can't ask for a better depiction of what we're seeing right now. It's just been magnificent. It's been beautiful. Very blessed to be able to share this information with you guys. Huge shout out to ICT. Would never be able to even explain these things else. And it's the real truth. So I'm not really familiar, and again, this is no shade to him, but I'm just not familiar with the MMXM trader's work. I see him all the time posting and stuff, but I just personally haven't watched his work. A lot of people have recommended it to me, and I've heard great things about it. I honestly should. But he can also attest to it. I've never been in his group or a student of his of any measure. Trading futures better than Forex. That's your own personal preference. That's what you have to figure out. If you're a good futures trader or a good Forex trader, how would I tell you to look at one or another? I don't know. That's your own personality. I just suit in NASDAQ because it suits my personality and I have a decent read on it. And again, human emotions here, where you can't discount them. I'm already telling you up here, I'm getting impatient. So hopefully you guys can recognize that the moment that you can see that, these are the signatures that, again, that price will just play off of. And I said that anybody that was here has to make a decision the moment that these signatures happen, because if you're here, anyone that assumed the long position, they're just likely to return back to a discount. And if those people aren't able to weather that quote unquote shake and bake in their position, let's be very honest and real with each other right now. From 390 to 350, that's 40 points on the NASDAQ. If you're trading one mini, that's almost $1,000 difference per contract. So basically, hopefully that can also show you that when maybe you're getting impatient here, you may not be the only one too. But like I said, these are the things you gotta recognize, that where greed just comes into people. And if you don't recognize your own greed, then these are the events that could happen. And again, just because it is mechanical, the way that we can define it, there's no swing. There's a swing high here, but this didn't contain a stop leg. You could use this one, but that's not my personal preference. But if price did stop there, then c'est la vie. So at least you could identify where and why things can happen. And that's been the biggest, I really want to say, like, the biggest blessing that ICT can have, because I just sleep well at night knowing that there's just no confusion in terms of what I'm looking at for terminology, for stages of models. I'm never confused. It's always human error. That's the biggest thing I want to always say, because I can definitely show you a reason why price did what it did, and yes, people can say bad or good from ICT because of that, but at the end of the day, if you're not finding the reasons why, if you want to live in the land of confusion or say that it's random, then be my guest. But that's not how these markets operate, to my opinion. So as we said, from premium into what? Discount. I said, objectively speaking, going below this low invalidates the order flow. On a lower time frame, this is where, again, I mentioned to you, I'd just be impatient. And this is the leg where, very, again, brutal honesty, this is the leg that shakes me out of, let's say, more positions than not if I didn't take a partial anywhere over here, or if I was short here and or didn't collapse the trade based off of here, and we already saw a break here, you already know you're getting back to at least here. And that means that after I go to EQ, you have to monitor order flow. Well, monitor order flow, down close candles, context based off of time. See what I'm saying? So they would have gotten tagged. I don't have any questions. Been really fun today, honestly. I cannot lie to you. It's been very fun. Questions in the chat from anybody? Draw a line and see if anyone pays attention. But low rated body. I think that that's a good one for here. I think we can end it right here on that. Background color and trading view. I literally shared my chart, but canvas background, just regular FC. Do you have any questions? It's been fun. It's been real fun. Shout out to you, Bumble. You want to give away? We'll do the giveaway. Extend the fair value gap in the stop run leg to the right. How do you paint the story because some candles close below it? What do you think the answer to that question might be? If you were to actually ask yourself that. Because it's a good question. Extend the fair value gap stop in the stop run leg to the right. How can you paint the story because some candles close below it? We went over that in the second portion of the journey. So somebody here should be able to answer that. And we also talked about it when we basically brought up the other assets. So hopefully that can answer your question. It's based off S&T, smart money technique, smart money timing. ICT still hasn't told us what he wants to call it. I'm happy calling it both. Discount to premium. It's just so cool seeing this print and pan out live for you guys as well. You just got to see the buy model, a sped up, non-fractally consolidated retracement. That shouldn't fear, no fear there. You shouldn't have fear. Simply just below here, raid, come back up. If I was wrong, where's it gonna go? Liquidity here, or to this propulsion block. Close below here, the change of order flow based off of the continuation. Who could help out Top Kid CPU? He has a question specifically related to order pairing. Draw out your order pairing zones, find a fair value gap. If they overshoot it, look for SMT. If you want SMTs that are more reliable, look at the daily and weekly charts. How many people are still with me? Drop a 1. We'll look to end it pretty soon. It's been an hour and a half. It's been pretty cool. Yeah, pretty cool. Does anybody have any last questions before we do a giveaway? I want to give away a Fractal Consolidations for a month and let someone just toss this on their chart and just see. Like, you guys can see there's not really anything else that's on the chart right now for what we're looking at. It's literally just Fractal Consolidations. One tool can literally revolutionize the way you see price, and I truthfully believe that. Just look at this. This is not exactly like what we talk about. And then just seeing this, and then there's another one staged there, and we talked about this. Reaccumulation pairing here. Told you this is where I get nervous and impatient. It was here and here. This is where you don't get nervous. This is where I got impatient. Equilibrium, propulsion order block. So objectively speaking, look at the price. Up close candles. This is the first up close candle, really. That was broken. There's a lot of S&T indicators that are not necessarily, I hate using the word, but they'll paint a lot of things, is all I can say. Because when you look at SMT from an algorithmic standpoint, it happens literally almost every single time. So filtering it is what people struggle with. So they're either on the verge of either being too, quote unquote, delayed from a 5-bar swing, or they get too much just painting like all the time, if that makes sense. So SMT is just really requires a lot of context. Over time, you guys will see, but like, is this not beautiful? Drop a 2 if you don't think this is beautiful. Oh my goodness. Just look at the way this moves though. And everything that we just kind of talk about. It's just, I don't know. Alright, let's do a giveaway. Doesn't look like there's any last questions, and it looks like after they stopped out everyone, their mother's right here. They want to see you with some order pairing here. And again, now let's see what their final objective is. Coming up on 11:45. So the last 15-minute candle. EOZEN, can you please rephrase your question so I can understand a little bit more? Is there any information when the micro is not making a higher lower fair value compared to the mini? I think that you're referring to the same contract SMT. Is that correct? Yeah. I'm talking about the same contract SMT. So let's talk about that. All right. The best example that I can give you is if I go over here and I take off the symbol, I go to a 15-minute chart. Basically, look at this. So you guys see, I don't know if you could see this. You guys see that this Tuesday open. All right, so NASDAQ, where's MNQ? So Gozan has a question about NQ, MNQ. So when you see this and you see this, are these prices the same? That's your first telltale sign. If this ever happens, and I know there's probably some people in the chat that we had this discussion with over the phone personally, but when you see different opening prices here, this is just a flood of information for you to be like, hey, listen, I gotta understand what's going on below this. You can see that, look at this low here. So not only did it diverge on actual price opening and trade location, but they diverged on the low also at specific prices. So when these instances happen, what do I make of it personally? I just know that there's liquidity that's going to be resting below here and above here. Does this give you some extra information to say, hey, listen, there could be a reversal? Sure. I haven't backtested it enough to tell you with a great deal of confidence that yes or no. So if you're referring to this difference between MNQ and NQ, then again, this is more or less what you're seeing for that SMT, and that did happen at the open. But again, just recognize the opening values of here are vastly different. So that's why you can also see these signatures. So hopefully that was helpful. I don't know if it was, but if it wasn't, I'm sorry. Cool. Yeah, there are some other smaller examples that I might want to be able to just see here. Because like one thing I will say is that there are some periods, and again, you kind of have to really look for it, which is why I don't try to stress myself out about it too much. But there are some instances where you'll have like a short stubby wick like this, and then you can see that there's, see this? So like 70 to 71 and a quarter and 70 and a half. So like these right here, take what you want with that information. That's when I also start to like see that. Again, it's, if it helps you, great. If it doesn't, don't worry about it. I just personally don't use it. Like, that's a little bit too confusing. So yeah, I appreciate everyone with the nice comments. I really appreciate that a lot. Yeah, if you trade like micros, minis, then just be mindful of those things being happening. But again, I wouldn't stress it too much, because it really shouldn't like make or break your position, in my honest opinion. I personally don't trade the forever model. I haven't given it enough like let's specific like screen. Only spent like time with like coding it with Toodegrees, not actually coding it, but assembling everything and making sure everything's good. But I can't code. I can only read code, and I can only basically help out other coders think to a certain degree. But I definitely do not create code myself. Appreciate you. TTFM, absolutely. That's on my charts right here. I like this specific layout a lot, because I remember I told you guys I like the 15-minute delivery. This is also like the hour model, so you have 4-hour candles here, and then I basically just use the stat map here, which you kind of just the 4-hour manipulations and distributions, and then it's on both. So that's pretty much what I look at. And then over time, sometimes I'll toggle on the like historic. This is beautiful today. This morning I saw that like on the stat map. I could just talk about some sauce real quick, but sure. All right. Bottom line is you're at a distribution or a manipulation level, right? Then like what you can end up looking to do is, should we go this far? Basically, the moment that these levels are hit, like on the distribution, and let's go back over here so this is more clear. You see how distribution here? This is like the prime where it's literally just right there. So even more so, like looking at this, if you go to a 5-minute chart and I just put this to the 15-minute, you can see that this is beautiful. Boom. Yeah, it's literally textbook T-trades. Hopefully, I'm not saying that incorrectly, but I mean that's magnificent at a previous statistical discount. So that's how you can use the model. Like I like qualifying it with higher time frame points of interest, and utilizing it on like a time frame to me just gives you more range of opportunity. I monitor like the framework and logic on an intraday basis, but I don't necessarily base my trades off of it. I have it in a specific, like let's say position management type idea. So let me know if that was insightful or not. Hopefully it was. It looks like we're finally gonna get some buy side after they shake and bake Ricky Bobby and they stop everybody and their mothers out. Yeah, AR looking really nice. When volatility is high, again, I think we can just kind of look real quick. Like this went absolute crazy mania of a time. Like, again, I'm telling you, like I literally borderline, like I'm just like, I don't even want to look at the markets right now. Like it's just too crazy. Like we were just getting absolute mania. So let's see what I'm gonna say it as clear and professional as I can say. Let's see what the President of the United States says within the next 2 days, because as of right now, this is much gonna determine a lot of the next volatility. So it's gonna be insightful. And again, if anybody like wants to see more market maker models, they're asking like, does it have other asset classes? Well, this right here is pretty gorgeous, right? It's almost full symmetry, which happens rarely, honestly. See that? See, like my mind on all symmetry. Like that's like that like the perfect examples, like previous reaccumulation, distribution. It's all the same stuff. So look, inside of this, let's get rid of this real quick. Make these. Every time that we broke structure, came from a stop run, structure, block, imbalance, beautiful. Order block, beautiful. Width, and imbalance, beautiful. To the T. Look at this. This is why I love this stuff. I could literally go all day, but let's also keep it a little bit more brief. Because I did say I was going to end it soon. I feel like it's getting a little bit long here for the... And again, if you're just watching me mark up the charts and then you're not doing it yourself, then like all you're doing is just like quote unquote like a Netflix. And it's like you guys very likely, you know, want to gauge in your own because they're going to be meaningful to you. So you could basically see here. I don't really like doing this too much because this is when everyone starts to like say, oh, my charts are going to look like yours, and that's not what I want. So, but this is how my brain interprets price, and this is what I'll end with. Okay, so that is beautiful. Nice trade. So yeah, trading view don't want to load right now. That's funny. Well, you can see it right here. Pretty beautiful, honestly. Same thing. This is clear right here. Nothing new under the sun. Shout out Focus. So yeah, hopefully that was insightful. Once this low gets broken, I actually want to get an alert. Alright, let's do a giveaway. For everyone that's actually still here, shout out to you guys. Fractal Consolidations, 1 month coming up. Alright, well, feel free to enter that. Anybody can enter it. Doesn't matter your subscription status. 1 month of the Fractal Consolidations. Hopefully you guys can get a nice view on price. It's been a very relaxed, chill stream. Definitely will say it. Really wanted to see this buy side raid happen like way here, but you guys can also appreciate the honesty when you saw that over here is when I got impatient. So, hey, good luck. And shout out to Bumblebee. I wonder if you win. That'd be kind of cool, honestly. If you ask about it and then you receive it, that'd be kind of cool. Alex, shout out to you, brother. Rippa, you are the winner. Shout out to you. Rippa, are you here? Awesome, fire. No problem, Jesse. I appreciate you saying that. Alright, I'm gonna cut this stream here. I know that this one is gonna be a little bit more to